This week, we are focusing on the Absa New Gold ETF, and Cobie, you've got the details.
Yeah, I mean, last week we looked at exchange-traded note. This week we're looking at exchange-traded fund. I mean, it's not the first time we're doing an exchange-traded fund. We have done one before that. The manager here for New Gold is obviously Absa Capital. Formation date there is November 2004. The gold price in rand terms is the benchmark for this fund. So it's not a dollar-based benchmark. It is a rand-based benchmark. But as a matter of fact, if you correlate those two over time, they actually loosely track each other because the gold price prices in dollars, and whenever the rand appreciates or depreciates, that just gets priced in then. Total expense ratio there is at 0.40%. And I come back to what I said previously. If you're going to be owning gold, this is probably one of the purest plays that you could potentially be having on the gold price. Just looking at return numbers for specifically New Gold. Let me just give you an indication of what those look like. Over 1 year, total return 43.28, 2 years 31.52. That obviously mimics the price in gold price in rands. 3 years 20.78, and that's obviously a per annum number. If you look on your screen right now, there you'll see the gold price in rands. That's in red relative to New Gold, the price in New Gold. Now, I mean, the one thing that you'll pick up from there is that there's a slight performance lag, or it looks like there's a performance lag, because it looks like New Gold is slightly underperforming the gold price in rand terms. Maybe that's a good question for Vladimir. Vladimir, why is that the case?
That difference is really just a difference in that 0.4% management fee that is charged. And the way that the actual process works is, and again, the same mechanism is applied in all gold ETFs worldwide, is that when you list your gold ETF, your ETF will, each security in issue will be equivalent to, in our case, 1/100 of an ounce of gold. Obviously, you would have to take the costs out of that 0.4%. So the allocation of that one debenture to gold will decline by 0.4% per annum. So at the moment, one New Gold debenture references 97% of 1/100 of an ounce of gold, and that difference is really what you see. But importantly, whenever you get into purchase a New Gold security, you're paying for that amount of gold. So there is absolutely no lag or the discount in the price of gold. You're purchasing a certain quantity of gold, and you're paying for that certain quantity of gold.
And since inception, what a fantastic return.
Absolutely.
388% over 1 year for 43%.
It is 25.7% annualized return since inception, which was pretty good.
You know, that looks like the heyday numbers for equities. You know, when the equities are seriously running on a 5-year basis, you know, you get to a number quite similar to that since inception number, which is about 25.7% per annum. And then obviously it starts pulling back from those levels because, you know, no economy expands ever at just an ever increasing rate like that. So, I mean, certainly, I mean, you know, again, this is for me a pure way to own gold. So if you're going to be owning gold, I mean, this is a good way to own it.
I think we should mention that owning gold is a good strategic long-term holding. But I think what we're seeing in Europe again is people are diversifying and not just holding one commodity. They're holding a whole bundle of these things. And I think if you want to add value to your portfolio, you've got to have gold, you've got to have maybe silver, maybe some soft metals, maybe even oil. And you can now trade these things without having to worry about the physicals. Vladimir, I don't know if you guys are planning any other launches or what we can expect in South Africa, but I do think that gold is a good place to start. But there's so much more we can do if we add other commodities.
Yeah, we do believe in commodities, and commodities are generally very, very, very good investment class. And the main reason for it is really a diversification argument or the low correlation argument. You always, in order to have an optimal portfolio, you have to have assets that are uncorrelated. Gold is one of them, and you're right, you have to have other commodities in there. We will be launching different commodity ETNs.
What's the priority?
One thing to, I mean, we'll start end of this year by listing a broad commodity index ETN. The one thing that one needs to take into account when you consider investing in commodities, you can invest in so-called exchange-traded commodities such as the gold ETF, which is physically backed, but most commodities you cannot trade in that way because it's quite impractical to store timber or oil or those types of commodities. So you would tend to trade them through ETNs, which are basically track future indices, and you will get the exposure to that commodity or commodity index, but you have the credit risk on the issuer. And that is something that obviously needs to be priced in.
Vladimir, Roland asked you a very interesting question. What is your priority right now? What commodity are you most bullish on? And I love looking at this platinum gold ratio, which is playing out, and platinum is trading at a discount.
Hedge funds would love to trade that ratio.
Absolutely.
Yeah, if I had a crystal ball, I wouldn't be sitting here. I would sit on a beach somewhere. But I think from an issuer point of view, what we need to do is offer a broad range of products to the investors, and they will obviously at some points in the business cycles, some asset classes will be more wanted, but we always have to offer a broad choice so that people can switch between the classes.
Okay, closing comments now,
I think the other thing, my closing comment. I think the other important thing is that I don't see many pension funds owning these directly. So actually what they're doing is they're owning them through other funds. So it's either fund manager that buys it as a portion of their total equity holding, or alternatively maybe they've got a commodity manager specifically that is buying a range of, say for instance, mining stocks, and then they own this with that, for instance. And that's what's so nice about this, is it's accessible. The accessibility of an ETF is fantastic.
Closing comments, Roland?
I'd like to see IFAs and private banks look at this a lot more closely. We're not seeing any of that happening in South Africa, and it is a big advice role that they provide their clients overseas.
Well, we have, I think this was a very successful product for us, still is. And what we are doing is we are trying to expand it to other countries. We've listed it in Botswana. We are now in the process of listing New Gold in Nigeria and Ghana. And I think it's a very good product, and the more people know about it, the better.
Fantastic. So into Africa, that's great news. Thank you, gentlemen. Great to have you on the program. Thank you so much for your insights. That's all the time we have for this edition of Wealth Quest.